Hello, and welcome to Trestlebridge Capital's monthly market and economic recap. Before we begin, here's a quick note from our legal team. Today's discussion is hosted by Eric Jefferson, managing partner of Trestlebridge Capital, as he breaks down this month's key market updates. Let's get started.
Congratulations, we've officially reached the midpoint of 2025. What a first half of the year it has been. A handful of geopolitical flare-ups that have temporarily spiked oil prices, as well with all of the tariff uncertainty we saw in early April that at one point sent the S&P 500 plummeting 20% lower. Despite all of that, we've seen stocks claw back to make new all-time highs, registering a gain of just above 6% on a year-to-date basis. As we unpack those returns, once again, the market has been led by more of those growth-focused companies, particularly names in technology closely tied to the AI theme, as opposed to the more traditionally oriented value sectors. Looking globally, roughly 9% decline in the US dollar relative to a basket of other currencies has helped buoy international stocks. That's new trend, first time we've seen over the past decade or so. However, the biggest winner in falling dollar has been gold, precious metal, registering a gain of 25% on a year-to-date basis, with gold mining companies or those that physically extract the commodity out of the earth with returns more than double. On the economic front, labor data has remained solid. Granted, have seen some softening in the various measures, but overall, unemployment still remains well below recessionary type levels. And on the economic front, GDP forecasts for all the disruption continue to suggest above average growth as we look to the balance of this year. Now, all of this comes on the eve of update on tariffs scheduled for July 9th. As well, we are potentially days away from the one big beautiful bill making its way through the Senate. That obviously has a handful of pro-business, pro-growth policies included in it that have helped more than offset some of the concerns around speculation that would continue to increase the national deficit. Obviously, something that will have to be addressed at some point, likely in the years ahead. Now, in the coming week, we'll be publishing our official mid-year outlook. That'll go into a lot more detail on each of those segments mentioned above. That being said, strongly encourage you to reach out with any questions or concerns in the meantime. Thank you again for taking the time to join us. Have a great 4th of July.